Hello again, everybody. It is Tuesday, October 15th, and I am Dr. Richard Smith, Chairman of the Foundation for the Study of Cycles, and we're back with Cycles TV. Man, is Cycles TV killing it or what? 3 shows a week now. Know y'all are loving it, and we are a not-for-profit foundation, so love your support so we can continue to do what we do. So this week, of course, we'll take a quick look at what we talked about last week, and then wanted to dig into Bitcoin a little bit because I just feel like things are kind of setting up for maybe the next leg up in Bitcoin. Of course, you know, having a setup, as our fellow board member Jake Bernstein always reminds us, is not a successful trade. You need setup, you need a trigger, you need follow through. All those things, and this is trading market cycles. So we're not here just, we are learning how to do cycles, but we're also here to understand trading and how to use cycles in trading. So let's jump in and take a look at copper and what we were looking at last week, and then we'll get into Bitcoin, and then I'm going to give you a little update on what's going on with my new program, RiskSmith, which I've been showing you kind of how I do things behind the scenes. And I want to start to show you what it's going to look like as it's beginning to come together. All right. So good to be with everybody. Hello again. Thanks for saying hello. And let's see. Now I've got to share my screen. Do it. Yeah, there we go. Okay. So, all right, we're going to start here with taking a look back at what we were looking at in copper last week. And we were noting that things were on the bearish side for copper on the longer term cycles, but there were some short-term bullish cycles on the 30-minute and 1 hour, and we'll take a look at those. But the trends overall in the daily and the 2-hour cycles were pretty bearish. So we said, if you want to try to get a little pop to the upside on a 30-minute or a 60-minute bar, might be possible, or you could wait for those kind of bullish short-term cycles to pass and try to get realigned with the long-term cycles. So overall on the week, let me try zooming in here. I'll just do this. Okay. This was the daily cycles in copper. We were about here. So, some down, some up, some back down. Trading isn't easy, but continuing to look bearish on the dailies in copper. The 2-hour in copper that we looked at, also bearish. This bearish signal playing out pretty nicely. If you waited and got up short at after the 30-minute cycle topped, would have been about here. Would have had to live through this pushback, right? Again, this is trading market cycles, and we don't pretend that trading is easy or that, this is a silver bullet. But overall, the 2-hour cycle has worked pretty well here. We're crossing out now of the, we're down below the cyclic RSI. Let's see if I, come on, why aren't you working? I don't know. Okay. We're crossing down now out of the cyclic RSI and moving down nicely in copper. Looking at some of the shorter term cycles, this was the hourly cycle that we were talking about. So we were right about here when we met last time. Got a little bit of bullishness, certainly not bearishness, and then got a nice move down, but again, some chop. And this is the 2-hour cycle kind of taking over here and continuing to move down. And it was similar with the 30-minute cycle. Got a little bit of upside here and then not much more. So overall, I'd say it was mixed. Didn't really get a good pop. And overall on copper, the bearish bigger picture is starting to take over. If we jump over and look at the trends, this is where they were in copper last week when we talked. Kind of flatlined with the total score of 10.8. And if we look at where copper is today, things are continuing to roll over with a total score now of 8.73. So definitely continuing to see deterioration in copper. But look, these trends are still pretty darn bullish overall. 8.73 is a positive trend. So again, we're seeing this in a lot of markets right now, a lot of asset classes. You've got these, been strong uptrends. They're not collapsing instantaneously just because the cycles might suggest that they might. These things tend to take time, but we definitely are seeing weakening, seeing similar pattern in equities, and continuing to see the weakening in copper. All right, so now let's talk about Bitcoin. So going through our usual big picture, right? Here is the commitment of traders, commercials in Bitcoin. Okay, maybe the miners, you could say, are producing Bitcoin, but overall, this is the biggest participants in the markets, probably the ETFs, etc., and pretty bullish, right? Positive on Bitcoin, as bullish as they've been back for 4 years or so. Maybe it's with the idea that Trump is going to be president. Trends have been heading his way over the past week. I think that's why we've gotten a little pop in Bitcoin, but the cycles have been setting up for this for a while now. I wish I had covered Bitcoin last week. I was thinking about it, but I said, they don't want to hear about Bitcoin in such a short time from the last time I covered it. But I really think things are setting up in a pretty interesting way. So smart money, as bullish as they've been on Bitcoin in the last 4 years. Small traders, not excessively bullish. Okay, 60 is the current reading, not excessively bearish, right? So some of this, gain has probably been used up already, but not excessively bullish, right? We're not up here. What was this, like April of 24? We can look at that on the price chart. I'm guessing Bitcoin topped around then. Maybe that was when the ETFs came out. Probably was. And we've worked off a lot of that froth, and where sentiment from the small trader is fairly neutral. All right, October here for the month on Bitcoin. Not a ton of seasonal history, right? We've got 13 years of Bitcoin now. Overall bullish seasonally in the month of October, one of the strongest months for Bitcoin on the calendar. And this is just a little picture of the 50-day simple moving average. Okay, nothing fancy. You really don't need super fancy indicators. It's more about a decent set of indicators with good risk management and good execution. So we can see Bitcoin is above its 50-day moving average. It's provided some nice support and moving up pretty nicely. So meanwhile, this trend here, I didn't draw a trend line, but you can see we've had, lower highs and lower lows, right? So low, this high is lower than that one, this high is lower than that one, this high is lower than that one. But we are getting here where we're threatening to break above some recent highs here. And I think we just might do it. All right. And then looking at my trend indicators on Bitcoin, trends are all green. We have seen some deterioration in the trend over the past couple of weeks. Okay. It's not as high as it's been. It was as high as about 11.5 or so. So we are seeing some deterioration in the trend. And we need to see this not deteriorate more. So this is a bit of a caution sign. All right. So moving on to the cycles in Bitcoin. The weekly cycle in Bitcoin, the long-term cycle, not that relevant to the trades that we're talking about. It's got the 180-week cycle, right? The 41-month cycle. We've only got, I don't know, 1, 2, 3 iterations of the cycle. And we've got some topping in that cycle. So caution from the weekly cycle. On the other hand, the daily cycle, this is the Bitcoin futures. I actually prefer the cash Bitcoin here, and we see very clearly the 80-day cycle, the number one cycle. Actually, it's the number two cycle, sorry. 4 times that is the number one cycle. But the 80-day cycle is plenty for us when we're looking at shorter term trades, swing trades in Bitcoin. So we've got a clear bottom in the cycle. We've got some momentum moving up, right? It'd be nice if this momentum were at a bottom like it was back here when he gave this cyclic RSI buy signal. But right now the cycle's bottomed and momentum is pointing up on the dailies. All right, moving down. This is the 4-hour cycle. You can see a nice cycle on here at 62. But that's the same cycle we've been following in Bitcoin for months now, which is the 120 on the 1 hour, on the 2-hour charts, sorry. So if we jump over here to the 2-hour cycles on Bitcoin, 120 minutes, we can see this 122 period cycle that we've been following, roughly, a 2-week cycle, has also bottomed. Here we were, last week we were around here, got a strong bottom signal here and moving up nicely through this. And that was perfect. October 11th. Cycle bottoming, strong CRSI buy signal. No surprise, moving up nicely. So this is the cycle that I've been following in Bitcoin. What's interesting to me, sorry, that's actually the 260 cycle. My apologies. Dang. This is the cycle we've been following in Bitcoin. Very sorry about that. And you can see also that this cycle is topping right now. Okay. And, wavering in the momentum here. But what I wanted to show you also was this other cycle that we were just looking at, this 260. Okay. So when we look at that, we've got the bottom here. It is the number one cycle. It is pretty close to 2 times this 122. So if we combine these together, I think this gives us a chance to break out of the range we've been in, especially when we see these two kind of coming together. So the 260 is going up. This 120 here would bottom October 20th. So what is that? Today's the 15th, so maybe Monday or Tuesday. So we could have some headwinds from this 2-hour cycle, which has been the #1 cycle in Bitcoin. So far, it hasn't failed. Okay, the momentum is actually back above the cyclic RSI right here. Okay, but we are topping here, and you definitely it's a risky place to buy. Let's just put it that way. But we have good support from the daily cycle above it, and we have good support from the 260 period cycle from this 2-hour data. And we have good support from the smart money being as bullish as they've been on Bitcoin in the last 4 years, and we have good support from the trends. So we do have to pay attention to this topping of this cycle that we've been following for a long time. But I'm seeing some support on the higher term timeframes, and I'm interested in if we can get a breakout. Now, I know Bitcoin has pulled back from the 68,000 levels since this morning. Let me see if I can get any more data in here. Nope. Because this is the 2-hour data. So where's Bitcoin at right now? It's at about 66.5. So it's pulled back from this little move this morning down to about 66.5 right here. But this is pretty open territory right here. So I'm keeping an eye out for a breakout here, because I think we're seeing support or encouraging signs from the daily cycle in Bitcoin here. Okay. Not perfect, but definitely bullish cycle. Also, I don't really want to look at this. I mean, it's redundant actually. So if we look at this 2-hour data on Bitcoin, yes, we've got the topping 120, but we've also got this very bullish longer term cycle that has also been doing a fantastic job. So that's the picture on Bitcoin. Let me stop for a minute and see what's on your mind. All right, good to see everybody. Wow, good turnout today. Hello, everyone. Excellent. I love the flags. Thank you. Hi, Dave from Cincinnati. All right, so Mark, can you please explain the value meaning of your 8.73 on copper? Look, it's a trend system that I've come up with. I'm looking at, shorter term trends of 20 minutes. I'm looking at 2 hours, and I'm looking at daily trends. And then I'm just basically taking an average of all those. And my trends use linear regression. So you can do something similar with a simple moving average or an exponential moving average. I kind of favor the exponential moving averages myself, because I think it gives a little more weight to the recent data, and the most recent data is the most important data. We see the same thing in cycles. So that's what 8.73 means on copper. It's totally it's a total trend number that I use. All right. We like the cycles in Bitcoin. Me too. I think that Bitcoin is actually a very cyclical asset. And that's not surprising to me, because I think cycles are largely driven by human behavior, because we human beings are cyclical creatures. So why wouldn't our collective actions also be cyclical? I'm sure we're also influenced by external influences that are contributing to those cycles. I mean, just the cycle of day and night, right? Or the cycle of a week. But yeah, so Bitcoin, I think, manifests the cycles quite well. Hello, Gilbrex from Gilbrex. Sorry if I didn't pronounce that right. Let's see. Thanks for another session. To diversify a bit the analysis, maybe review the cycles of the Brazil ETF EWF. Maybe weekly and daily cycles. Sure, we could take a look at that. I suspect traders using the 2-hour Bitcoin would have unwound their short when it rose, even though it ended down eventually. Very tricky. It seems you need to accept wide stops. On Bitcoin, yes, you absolutely have to accept wide stops. It's a very volatile asset. You have wide stops, but you also adjust your position size, okay? You don't have to have a massive position size. You know, a position size in Bitcoin is totally different than a position size in, 10-year treasury notes, okay? Totally different volatility profiles, and you have to have a smaller position or a tighter stop. All right, if you see bullish cycle and a toppy CRSI, do you interpret the toppy CRSI as overbought? So I really look particularly at, when you're getting, say, above the top line of the CRSI, but the momentum is still pointing up, okay? That can actually be temporarily a bullish thing when you break out of that top band of the CRSI and your momentum is continuing up. So when I'm looking at, where are we topping? I'm usually looking at, are we getting momentum divergence around the top, or have we gotten a sell signal with the top, curling back down below the band? So great question. And we'll look at some charts there and see if we can dig into that a little bit more. So let me jump back to the charts. Let's see, one more question. Can you elaborate on the 4-year cycle? 3 up, 1 down. I guess that's the weekly cycle. So let's take a look at that. All right, let me jump back over here. Okay. So first we were asking about this 4-year cycle. It's not 4 years, it's 41 months, 40 months. Okay, this is the same cycle we know about in stock market, also showing up in Bitcoin. And we've had a 1, 2, 3 tops. That's just on the edge of validity, in my opinion. But the fact that it's 180 is also 180 weeks. And you've seen this in the stock market over and over again. It looks like Bitcoin is kind of leading the stock market, topping a little earlier than the stock market. We'll see. If you looked at this, if we go out, this is the daily data on Bitcoin. Let's look at, let me close this, turn that off. We're looking at the 80-day cycle. But if you look at this longer cycle here, right, this 288 days is what? About a little over a year in trading days. We could go back a little further and incorporate a little more history. So again, pretty nice cycle there. The number one cycle, 260 days. So it's tightening up a little bit, but bottoming also, along with the approximately 80-day cycle. So nice 1-2 punch there. Looks pretty good. All right. What else on Bitcoin? I think that's it. I did just want to look briefly. I thought you might find this interesting, looking at the Ethereum to Bitcoin ratio. Okay, so this is Ethereum in the numerator, Bitcoin in the denominator. You can buy, an Ethereum with 0.04 Bitcoin right now. So when this is going up, means Ethereum is gaining on Bitcoin. That hasn't been happening for quite a while, right? So Ethereum has been losing out to Bitcoin for a long time now. Certainly back to 2021. And this downtrend in basically Bitcoin having bigger gains than Ethereum percentage-wise has been going on for a long time. So the cycle says we might see Ethereum gain a little bit on Bitcoin, say over the next month, but nothing to get too excited about here. If we look at a shorter term time frame of 2-hour data, again, on this relationship, this ratio between Ethereum and Bitcoin, we see it topping. So Bitcoin continuing to outperform Ethereum, and we've got a cyclic RSI sell signal on this ratio right here, right? So cycle topping and the cyclic RSI curving down and moving back inside the bands. So the cycles I'm seeing on Ethereum are not as bullish as what I'm seeing on Bitcoin. And I think this suggests we will continue to see Bitcoin outperform, gain market share against Ethereum, which makes total sense to me because I'm partial to Bitcoin over Ethereum because I think proof of work makes more sense than proof of stake. Didn't mean to offend any proof of stake acolytes out there. All right, so one last thing. There was a request to look at EWF. And then I'll just give you a quick preview of what I'm working on with Rich Smith. So weekly data in EWF, Brazil. Oops. So again, the ticker -W gives you weekly data. And I'm calling that data from Yahoo Finance. While that's loading, I'll also load the daily data, EWF :YFI. So we'll let that load. What do you mean data set not found? Come on. EWF -W :YFI. Huh? All right. Let's see if Yahoo Finance is working at all. Yes. There's Tesla. Maybe we have the wrong ticker. EWF. What is Brazil? Maybe I got that wrong. EWZ is Brazil. Okay. EWZ-W :YFI. And then EWZ :YFI. Okay, so here is the weekly data in Brazil, 850 data points. If we look at this, anything really looking good on the spectrum? This 119 weeks looks pretty good. I might want to go back just a little bit further and see if that's still looking good. Yeah, 120 is still looking good. Okay, so the weekly cycle, the number one cycle there, I think, yep, is down with the cyclic RSI and the momentum fading on the weekly data. Anything else jumping out at here? Not really. If we went to the daily data on Brazil, again, starting out with 850 data points, and we got a pretty clear cycle. This 164 looks to be topping with momentum heading down. So at least based on the weekly and the daily data and the cycles that I'm seeing, I haven't done other analysis here, but just based on the cycles, I'd say the cycles are not supporting much more upside for Brazil in the coming, months and years. Okay, so there you go. All right, just want to wrap up and give you a little preview of what I'm working on over here at risksmith.com. This is where I'm working to bring these tools to help us with position sizing and building holy grail uncorrelated portfolios or collections of bets. And it's coming along. And you can sign up for free at risksmith.com. There are still some quirks in here. So the math is working, but the user experience needs a little more work. But we're going to just briefly look at Bitcoin here. So this is a portfolio in which all I have right now is Bitcoin. And I have 0.072 Bitcoin, which is giving me $1,000 of exposure or $1,000 of risk based on daily data in Bitcoin. So that means if Bitcoin goes against me 10 days in a row, because I'm using daily data, with this size position of 0.072 Bitcoins, I could lose or make $1,000. That's just kind of the expected normal volatility and exposure for holding a position in Bitcoin when you're looking at it daily, okay? And you're saying, well, if things went against me 10 days in a row, what would I likely lose or gain? So it's giving us a sense of our expectations about how, what's reasonable to expect. And that's so key because our expectations interacting with markets form our beliefs, right? And as Van Tharp said, we don't trade markets, we trade our beliefs. So you've got to make sure that your expectations are aligned with markets when you're trading. Approximately, it's not perfect. We can't be perfect in markets, but you have to be in the ballpark to have your expectations not get under pressure, not be, oh, I'm not in the market enough, or I'm in the market too much, or this position is going against me and I can't take it, therefore I got to be reactive. No, we have to get our expectations approximately in line with the market. And that's what this does. And then it also helps us to make uncorrelated bets. So let's say we're starting out with a position in Bitcoin and we're saying, you know what? I think Dr. Smith might be right, and I'm thinking of taking a long position in Bitcoin based on daily data. Okay, we could go down to a shorter time frame, but just going to stick with daily data here. So then we might say, well, what else might work well with Bitcoin? What might be another bet for me to consider? Okay, so RiskSmith consists of two things: portfolios, which is something that you're in or intending to be in, and collections, okay, which are collections of things that you might want to be in, okay? So if we go back to that portfolio, where did I put it? I think I called it here. And then I can pull up a collection. Okay, so I think I had one here, yep. So I'm adding this collection now. What? Of course. Right when I want to show you guys this, the data vault. So these are the elements that are in the collection right here. Okay, some ETFs mostly. And again, I'm just showing you what I'm working towards and what this is going to look like. So let's try this one more time. We'll go back to our portfolio that only has Bitcoin in it. And then we will add this collection here. For some reason, the data is not coming up. Let me try a different collection. Okay. So the data did show up for these assets. So this is a collection of equities that I pulled up from a well-known investor from their 13F filings. Don't worry if you don't know what that means. But I can look here and I can say, well, okay, what of these can sort by correlation here, and I can say which of these other potential investments are uncorrelated to Bitcoin, to my current investment. And one of them is Walmart, okay, here at almost perfectly uncorrelated to Bitcoin. That's great. And if I wanted to have $1,000 of exposure in Walmart, I need 138 shares. I'm going to go here and I'm going to say, let me have 138 shares of Walmart. Let's see what happens if I add Walmart together with Bitcoin into a portfolio. So what we're seeing here is a before and after picture of our diversification, which when we only had one asset in our portfolio that was Bitcoin, there was no diversification, right? And when we take equal risk on Bitcoin and Walmart, not equal size, equal risk, both have $1,000 of exposure risk, our diversification jumps up to 38%, okay? And now, most importantly, look at our exposure here. So remember, we have two bets on now with $1,000 of exposure each, okay? So that's $2,000 of exposure if we were just taking them independently. But because we are choosing uncorrelated bets, we're getting a discount on our exposure. And instead of $2,000 of exposure, we have $1,450 of exposure. So we saved, $450 of exposure, which is, no, we saved $550. So that's what we're after. How do you build portfolios of uncorrelated bets? You can see kind of the before and after here. Let's say, yeah. So then once that's done, I can save that. And I can say, yep, I want Walmart and Bitcoin together in my portfolio. And then again, I can look again, sort by correlation. CI is the most uncorrelated here. I can click on that and see what it is. I don't remember off the top of my head right now. But I can see if I add this, Cigna, right? Insurance company. Growth has been good. Volatility relatively muted. Let's try adding it together with Bitcoin and Walmart. Doesn't actually give us a ton of new diversification, right? The green and blue lines are pretty close there, and actually so close you can't even really tell them apart here. But it certainly didn't reduce our diversification either. So that's how I've been doing it with the Jupyter notebooks. And you can see in this user interface, this is something that I'm working to make available to more people so that you can do what I've been doing, which is using this idea of exposure to help us get our expectations aligned with realities of markets so we're not out of whack. Because if we're out of whack, forget about it. We're toast. And then how do you combine uncorrelated bets, whether they be trades or investments, okay, so that you're getting a discount on your exposure. Now, exposure isn't the same thing as how much money you've got in the markets, because if we look here, this is actually, $4,755 worth of Bitcoin, $11,000 worth of Walmart. This is why there's no change from adding Cigna, because I didn't add the right number of shares. So I need to add 31 shares. That's going to happen automatically once I continue working on this. Now we can see that we did get more diversification, okay? And we added another $1,000 worth of exposure. So now you've got $3,000 of exposure. but we're only paying, because they're uncorrelated, that dampens the volatility, and our exposure collectively is only $2,000. And this is, $4,800 in Walmart, in Bitcoin, $11,000 in Walmart, and $11,000 in Cigna. So it's about $26,000, $27,000 portfolio with $2,000 of exposure, meaning this portfolio goes for or against you for 10 periods in a row. Just with the normal volatility that it's been exhibiting, you can expect about a $2,000 move. So that's what we're working towards. I think the interface is coming out really cool. And you can sign up if you want to play around with it. Please just understand that there are some glitches still in the user experience that I'm working on. But overall, happy with how it's coming along and excited to share this all with you more over the coming weeks and months. So with that, let me wrap things up. Take a few last questions. EWZ is Brazil. Yep. Let's see. Bitcoin, not bombs. BTC CDS has more data to analyze. Okay. Good to know. Thank you. MSTX is a leverage ETF with monster stock. Sailor is a little too out there for me. More power to them, but I just like Bitcoin. I don't really want to get into the leverage stuff. Bitcoin's volatile enough for me already. Solana looking good. Yeah, expectations affect emotions totally. Do I read exposure per unit of $13,000 results in exposure risk of $1,000? I'm not sure what you mean there, but again, exposure is not the same thing as your position size. Okay, it's basically a measure of the volatility you should expect. Okay, so the $11,000 position in Walmart over 10 days could move up or down by $1,000. A $4,800 position in Bitcoin could move up or down over 10 days, or $1,000 over 10 days. So again, smaller position in Bitcoin that came up at the beginning, right, than Walmart, because Bitcoin's more volatile than Walmart. Yes, you have to account for the fact that Bitcoin can jump. It just jumped 5% in like a couple hours this morning. So Walmart doesn't do that very often. Bitcoin does it pretty regularly. All right, y'all. Good talking to you. Bob, let me get to this next week. Thanks, everybody. I'll see you next week.